Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is January 3rd, 2018, and as you can see from the Deep Dive table, there is a lot of things going on here with all of the elastic wave level, power level, and so forth. So what I thought I would do is just select a particular market to really focus in on here today, and that's going to be copper, with the ETF being CPER. We've got a mixed bag here with the trends, and we've got the technical rating still positive, but on the negative side we have a slow high that is triggered with today's action, and we have a R for resistance gap, and you'll see also that there is the makings of a support gap as well. So let's take a look at the deep dive patterns and take a look here that we have a couple of things that have taken place here. One, we have a surge high that it triggered a couple of days ago, and just today, first time I'm going to be talking about this, there's a KS, and the KS high in this particular case stands for keel and sail, and it's really a sail high that is triggered here today. And what I mean by that, if we come here to the trade station, we look at copper. If I pull up the correct chart here, this is the weekly. Here is the keel. You can see this very faint plus sign right through here. I'll probably be changing the colors and the annotations here, but a keel represents a market or sail. In this case it's a sail high, that when you get a sail high in this instance, that the market has gotten into extreme overbought conditions, so much so that there's been enough action that if the market's not able to hold here, it's going to reverse course. So a sail on a sailboat, the keel, the bottom of the boat is the bottom portion, and we're obviously talking about the sail portion. So we have recently had a condition where the market A had this little plus sign here, which represents a profit-taking opportunity, and it represents a surge to the upside. The sail, in this particular case, represents a market that has a continuation of this overbought condition, so much so that when it starts to wane a little bit, you're a little suspicious, because it was so very strong that the market should be able to maintain itself. And we're at that juncture where the market's either going to find support and head higher, or it's going to break support and head lower. Well, lo and behold, here today, here is major support resistance. It's just broken through today. That is a 48. That's very strong. And when you look at that condition, the close broke back below it. We'd had a couple low lows that were touching it, another low that was here, and today's action broke back below it, and the close is below that particular level. That level being on copper the specific number 3.2757. That is where the resistance is to the market at the present time, and the keel represents in this case the sail. I keep saying that, but the sail is one in which the market has gotten into that overbought condition and was not able to hold the support level. The second thing that took place is with this particular magenta dot. This is the elastic level indicator, and it was a slow pivot high, meaning that we traditionally have primary and secondary. The secondary is where the market has shown its strength. It continues to be strong, and you're monitoring the market. But when you get the secondary signal, as we had here today, with the secondary, in this case the slow high condition, that you'd expect the market to sell off a little bit here. That we're now watching this resistance level, and if we're able to get the market to follow through tomorrow to the downside, then we'd be looking at this this level here, 318.47, is that the next level of support to the market. It's not that far away, but it's still profit to be made in the markets, and we do want to watch the markets quite closely. The systems, because of this trend, are still long. They've been liquidating some of the positions, but net they're still long in the market. So we're watching this condition here very, very closely. Let's take a look at the website and take a look at a few things that are actually taking place. First thing is the seasonal tendencies. This is the tail end of last year. I've not updated as of yet because we are looking at this covering up some of the numbers, and I want to make sure that we can actually see them. You can see that the market traditionally sells off with a little bit of volatility, at least into mid-January. Primarily we see it in the early stages here. When you look at longer term charts, the market basically just simply consolidates with volatility into the beginning part of February. So no matter how you look at it, the market is either going to have some resistance and some sell-off to it with some consolidation big enough that you can actually trade, and then on the 10 years, as I mentioned, it basically just consolidates, but there's no strength, in other words, to the seasonal tendencies. If we look at the trend level, you can see that LME copper and traditional copper, we're talking about New York copper here, so traditional copper, they're still on the trend level, they're still showing quite a bit of strength and trend, bullish trend in this case, to the market. You can see that wheat and Kansas City wheat and corn are on the opposite side, where they're actually weak trends. But the strong trends are beginning to subside a little bit. You can see it in the action. You can see it in the fact that we have a sale. You can see that in that pattern. We can see that there had been some profit taking. So I would suspect that the trend to the market is going to continue to weaken, and we'll go from blue back into this kind of I guess tan, and then eventually into the darker colors as the market actually starts to head lower, assuming that the market does that and the systems hopefully do liquidate themselves. The other thing I'll point out is on the master watch list, where we take into account a ton of different signals and weight the markets and give them some type of an idea as to whether they're strong buys and strong sells, something you should really be focusing on, things of that nature. If you've been watching the watch list, the copper has been, which is right through here, it's kind of basically a week long, kind of, you can understand that based on the market itself. It's a week long, and it had been strong and has been progressively gotten weaker and weaker over the last few days or so. So as things stand right now, we have just one system long. It's a 60-minute, and it's been long since last year, 11/30 of 2017. So that's a long time. Basically, all of December, it's been long, and we have a nice profit. But that's the remaining system, and it's trend-based, which means that the trend that we've been seeing within the market, and it's beginning to weaken. That's what the sale is telling us, is that, and the fact that we broke back below that support level, that is telling us that that system is probably going to liquidate itself, hopefully here fairly soon, and allow the market to fall off. But we've got a nice little profit here on a contract basis, just on the one system. Now, as far as targets, what we have is a couple of different targets to the market which are close to us. But if we're able to break, and we're close to it now, on a closing bar basis, the 3.250 level, then we have a bit of a gap here. There's that resistance gap that we first mentioned with the deep dive on the that first table we looked at. This is the gap that if the market were to rally, there'd be very little to hold it. Well, on the support level, it's not as dramatic, but if we're able to get the market to sell off to the 3.250 level and below, then we have a little bit of a gap here in the support. Then we have a couple more, and then a little more support gap right through here. So bottom line is that even though the systems are still long on a trend-based systems, no surprise that they would hold on to their position. Hopefully they will liquidate here fairly soon, given the fact that they have been able to take advantage of, along this little dip, they've been able to take advantage of this nice little strength to the market. I would suspect that if the market is able to really sell off here a little bit further, they will liquidate themselves. Will probably come down to this level that I was referring to here, and then if that is able to fail, then we'd be looking at the 50-day moving average as the next point where it might potentially head towards, and we'll have to wait and see how things kind of play out here. But there's definitely, without a doubt, a lot that is going on here with the deep dives, both in the traditional elastic wave level and power level, along with the support resistance monitoring. And you can see that there is a lot of information here that I would encourage you to look over, not just for copper, just with these two here, but a lot of other things that are starting to pop up here with across the different markets. I'll leave that to yourself to sort of review the deep dives, both in the pattern and the market analyses. But for my money right now, we're watching very closely copper, looking for a retracement, and hopefully the systems will be able to liquidate their position fairly quickly and not necessarily have to give back too much of that profit that we have underway right now. So we'll look at another market tomorrow, and we will go from there. Thanks very much for watching.